You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning, traders. This is your Options News Rundown for Friday, August 10th. Our first story today is from CNBC. Stocks fell this morning as geopolitical concerns pushed the Turkish lira to a record low against the dollar. The Dow Jones Industrial Average dropped 200 points as Intel declined. The S&P fell 0.7% as financials lagged, and the Nasdaq Composite Index also pulled back 0.7%. Bank shares led their way lower as in the U.S. as Bank of America, Goldman Sachs, Morgan Stanley, and J.P. Morgan Chase all dropped more than 1%. Tech shares also fell as Facebook, Alphabet, and Amazon all declined. The lira fell 20% after President Trump authorized the doubling of metal tariffs on Turkey. Trump's comment came after Turkish President Erdogan asked citizens to change the euros, the dollars, and the gold that you're keeping beneath your pillows into lira, noting that this is a domestic and a national struggle. Turkish stocks also fell on Friday as the iShares MSCI Turkey ETF dropped 18.1%. That ETF was already down 42.3% this year prior to Friday's losses. In related news, MarketWatch is reporting that U.S. government bonds were rallying this morning, driving yields to their lowest levels in recent weeks amid turmoil in Europe, sparked by questions about a knock-on event from economic distress in Turkey. Rattled investors and sent them fleeing to perceived the safety of sovereign power. The 10-year Treasury note lost 3.6 basis points to 2.899 a day after marking its largest one-day yield decline since July 3rd. The 30-year bond yield shed 3.3 basis points to 3.048. The 2-year note gave up 1.7 basis points to 2.633 following the biggest daily yield drop also since July 3rd. And our final story today is from Reuters. U.S. consumer prices rose in July and the underlying trend continued to strengthen, pointing to a steady increase in inflation pressures that will keep the Federal Reserve on track to gradually raise interest rates. The Labor Department said earlier this morning that the Consumer Price Index advanced 0.2%, the bulk of which was due to the rising cost of shelter driven by higher rents. The CPI rose 0.1% in June. In the 12 months through July, the CPI increased 2.9%, matching the increase in June. Excluding the volatile food and energy components, the CPI rose 0.2%, the same gain as in May and June. The annual increase in the so-called core CPI was 2.4%, the largest rise since September 2008, up from 2.3% in June. Economists polled by Reuters had forecast that both the CPI and core CPI would rise 0.2% in July. The Fed more closely tracks a different inflation measure, the Personal Consumption's Expenditure Price Index, excluding food and energy, which increased 1.9% in June. That gauge hit the U.S. Central Bank's 2% target in March for the first time in more than 6 years, and Fed policymakers have said that they will not be unduly concerned if it overshoots its target in the coming months. The U.S. Central Bank has already raised rates twice this year in March and June, and financial markets overwhelmingly expect a hike at the next policy meeting next month. The Fed currently forecasts a total of 4 rates this year, with investors expecting a final nudge upwards at the end of this year, looking at sometime in December. That's all we have for today. You can find all of these stories and more on theoptionsinsider.com. I'll be back on Monday with more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.